Joined now by Anthony Wood, the CEO of Roku. Anthony, thanks so much for joining us this morning.
Thanks. Hi, Julia.
So, Anthony, your stock has been sinking, declining by double-digit percentages, not just on this earnings report that showed a bigger loss than anticipated, but also some warnings about the year ahead. You warn about the macro environment. What are your biggest concerns? What are you seeing?
Well, first I'll just say that we had a really good quarter, great year. I'm super confident in our business, more confident than ever. We passed 80 million active accounts. We added 10 million new active accounts last year. We passed 100 billion streaming hours, which was strong growth for us. Revenue in the quarter was up double digits. So we had a great quarter, and we're really well positioned for the future.
But the stock is down about 17% right now, pre-market. Address the concerns of investors who are part of this sell-off right now. We've seen a decline in average revenue per user. What's behind that decline, and what's it going to take to turn around and start accelerating your growth rate again?
Well, like I said, we had a good quarter. We had double-digit growth. The forecast, the outlook, the guidance for the next quarter was similar growth. And I can, if I unpack that a little bit, our business consists of our platform business, which is what our investors are primarily focused on. Comes from advertising activities and streaming service distribution activities on our platform. If we look at those two parts separately, advertising, we're seeing good rebounding growth in the video ad business the video ad side of our business, which is probably the most important part of our business. So seeing good growth there and seeing that growth starting to continue to accelerate. And then if we look at streaming service distribution, where we distribute streaming services on our platform, it's an area that's doing well for us. But last year it was very strong because we saw the industry, for example, raising prices. And so that's made the comparables year over year a little bit tricky. And then there's a part of our business called media and entertainment, which is where we focus on, helping media companies promote their services on our platform. And it's something that we're really good at. We're probably the industry leader of that. It's a strong business for us. But it's been challenged and pressured for the last 4 quarters, and it's probably going to continue to be pressured for the rest of this year. And that's the root cause of that is that there were a lot of streaming services that launched, and they spent a lot of money promoting their services historically, and it was unsustainable levels. We're seeing that start to come back to more sustainable levels. But overall, one of the core drivers of our business, which is the video ad side of our business, we're seeing good growth in. And we're super well positioned in the industry with 80 million active accounts. We've been the #1 streaming OS in the United States for the last 5 years. And there's just a lot of opportunity to continue to drive monetization growth on our platform. And it's an area that me and my team are spending a lot of time on. And this year, we're more focused on that than we were last year. Last year, we were focused primarily on operational improvements, which we made great progress on.
Mm-hmm. But in terms of this macro uncertainty that you mentioned in the earnings release as well as on the call, is that about the advertising market? And when do you see that turning around?
I guess we're talking there about the ad business, the overall video ad business. But the video ad business, was in sort of, some people call it an ad recession or ad winter, but it is definitely starting to rebound, and we're seeing that, and that's driving. It's a core driver of growth for our business, but it's not even. There's some categories that are still depressed, some that are rebounding. So I guess that's what we're talking about. But just if you think about the video ad business overall, if you look at streaming, like it's over a $60 billion a year business. And if you look at sort of the dollars versus hours, 60% of viewing hours is on streaming now for consumers, but only 30% of ad dollars have moved to streaming. So there's it's a big opportunity for us as those dollars continue to move over to streaming.
And so you mentioned, the role you play distributing these apps. There's been a lot of conversation about this new sports streaming joint venture between 3 of the media giants. What does that kind of new entrant to this space mean for your business? Is it a good thing because it's perhaps a new advertiser, or does more consolidation in this space maybe mean fewer streaming services for you to be selling on your platform?
No, the launch of a new sports streaming service is great for Roku. I mean, we're the #1 streaming platform in the United States. We're going to be a big partner. We'll be a big partner, probably their biggest partner for distributing that service. We have a lot of tools to help them do that. more services for consumers drives, just drives competition and is just good for consumers. It's good for us. And also just think about where the industry's at right now. It's definitely starting to mature. I mean, we're seeing that with the AVOD tiers coming in on the major streaming services. That's a sign that they're focusing on, mainstream consumers. We're seeing more sports services, which is one of the last areas, in the traditional pay TV bundle that was sort of something that they held, but sports are now moving almost all over to streaming. So I think this is all a sign of the maturing of the streaming industry, which again is just good, because one of the biggest factors that will drive our growth will be that those advertising dollars that are still spent on linear TV, even though their viewers have all moved to streaming. And this maturation of the industry, I think, will cause both the viewers to move faster, but also the ad dollars to move faster.
And you mentioned AVOD, that's ad-supported video on demand, ad-supported streaming. And we saw that Amazon recently launched its ad-supported version of its Prime Video app. Of course, we have Disney and Netflix continue to push the growth of those platforms. Is that more competition for your own ad business?
No, I mean, well, like I said, I think what we're seeing is a maturation of the industry. So, ad-supported tiers are the norm in television. Like, it's how television started. Consumers like it because it lowers the cost of content. It lowers the cost of services. So more, I think, again, more ad-supported tiers is just a sign that the industry is maturing, and it's going to accelerate because it's going to lower the prices of streaming services. It'll accelerate viewers moving to streaming, and that will also accelerate ad dollars, the overall ad industry moving to streaming. So, and then also, I guess another thing that's worth mentioning is, in terms of if you have an ad-supported tier, you're very focused on engagement, because the more people watch, the more ad impressions they might see. And, we're a leader in the tools to build engagement. Something that we're just very focused on is in our user interface, helping viewers find something to watch, and then we can help them find ad-supported content.
And Anthony, we're out of time, but I do have to ask you one quick question, because your stock took a big hit on a report that Walmart was going to buy Vizio. What would the impact of that kind of a deal have on you?
Well, I mean, that's speculation. I can't really talk about that specifically. But I will say that if I just think about where we are in the industry, with 80 million active accounts, the #1 streaming platform in the U.S. for the last 5 years. And super importantly, why do we have 80 million active accounts? Well, it's because we have a great product. Viewers love it. We have a very strong brand. Viewers love the delight and simplicity of Roku. They often have multiple devices in a household. And so, you take all that together, and in fact, we also have very strong retail distribution, both inside the U.S. and outside the U.S. And all of that, along with our focus on streaming, our innovation, our scale, our loyalty of customers, our brand, it all gives me a lot of confidence that we're going to continue to grow distribution of our platform. And we added 10 million new active accounts last year, and we're going to add a lot of active accounts this year as well.